Bill, tell me where you farm, how much you farm. Tell me about your operation.
I'm a corn and soybean farmer up in Marshall County. Farm with my brother, my nephew, my son, and myself.
And where do you sell? It's going to a market someplace, but where does that eventually go? Is it on a rail market, river market?
You know, I'm kind of an interesting location. Central Illinois is an interesting location. If you take where the Illinois River bends from going north to going east again, I'm kind of in the corner, not quite there, but Marquist Energy is 25 miles away. I've got the Illinois River's 25 miles away. I've got a rail loadout terminal that's 8 miles from the house. And I've got ethanol, I've got the river, and I've got rail.
So you've got a lot of different markets, and obviously then at that point, you've got really good prices, apparently.
Well, it's interesting. They know where the markets are. There's nobody that's going to drive it too far out of bounds. So it is always a competition. I have on-farm storage, so I do play that game a little bit of who wants it worse.
Okay, but anyway, those markets that you depend upon, at least the river market, the rail market, probably are not as good this year as they have been.
It's interesting. Rail has still been pretty good. They our terminal site. They're going to the Canada or Canada. They're going to Kansas and Texas, more Texas this year, and south into Mexico. So we've got trains going down to Mexico.
Okay, let's see. We don't have any tariffs on Mexico right now.
Not right now.
Okay.
No, that's part of USMCA.
Okay, but we've got tariffs on other markets that if it goes down the river and it's not your products aren't going to China or a lot of other countries right now.
No, my corn, of course, China is a fickle export market anyway. If they need it, they'll buy it, and if not, they'll find excuses not to. So you never can rely upon China as a corn market. But yes, you're right. 40% of Illinois corn goes down the river into exports.
And so when you think about trade, you see headlines about tariffs and trade. What do you think? This is probably something that's not going to be very helpful.
You know, it's going to be an interesting process. I've had this thrown at me a couple of times. Are we doing tariffs to encourage trade deals, or is this going to be tariffs for tariff's sakes? Which is two different things. I mean, is it a market opportunity? And we've had those. After all, we've had some good. We have not had any new trade deals for practically 20 years. And with the tariffs, we've got some understandings, at least with England or the UK, and I think with Indonesia. And there's supposedly a bunch more coming on. It's just fleshing them out and getting something actually that's a trade agreement written and enforced. It's going to be the interesting part.
Now, as far as agriculture and all of your colleagues that raise corn and beans, there's a lot of challenges right now that are not really very positive when you think about the farm economy and farm prices and what you're going to do next year.
No. You know, I started farming in the 80s, and I tell people how bad things can get. At one point, if I remember right, we were growing a 6 billion bushel corn crop back then, and we had over 2 billion bushels in carryover. And that's a big percentage. Interest rates were really high. So I looked at surviving the 80s as a guideline for, how, what things can be. Markets should cycle. There's the economics of it. You find out what you can grow, where's the most profitable place to be. And finding that ground and hoping it doesn't last too long is the key to all that.
Are you finding profitability anywhere right now?
I think if you're in livestock, which I'm not anymore, and that's kind of what saved us in the 80s. We raised hogs back then, and there was some money in that. They say within most of the sectors, the row crops and the wheat and stuff, there's not been a very profitable side of that. But if you're into livestock, they're doing pretty well.
It seems like profitability really is reflecting of some high input costs, such as fertilizer. We've got a lot of high-priced phosphate right now, and versus low prices that are kind of bumping against up some tariffs and limitations there. So there's probably a pretty good pinch on farmers such as yourself.
Yes, I wouldn't want to say it's fun. I usually say, when we're done with this, I'm going to go home and play farmer. Because, it's something you enjoy. And I enjoy being a farmer. But when the economics are where they're at, the stress that goes with it isn't always enjoyable.
So how do we fix this?
Well, our view is markets. The cure to low prices are low prices. It should be. And it's almost always worked that way. So hopefully you let the process go its way and it should correct itself. But we're not seeing the delay for the input costs. They usually go down when commodity prices are not very high. And we're not seeing that decrease. During COVID from 2018 or 19 to 2022, there was a big jump in the cost of inputs. And they've only gone down 3% since then. And, that's not much when you're dealing with $900 an acre input costs for corn. And
with corn prices and soybean prices headed down, there's a lot of pinch in there.
Yes, there is. It's as I think earlier in our conversations we were doing it, the equity, your working capital is being consumed. So that's why in some ways it's always good to try to put a little something aside.
Do members of Congress know about this? Are they aware of how bad things are when they go home to their home district?
I think they're hearing about it a lot. I know the folks in the South are being very vocal. A lot of other products are being very vocal as well. The problem with, I shouldn't say the problem, one of the things about farmers is we are price takers. We're not price makers. So if you're running a fertilizer plant or almost any of the other businesses, they've got a profit margin built into it. And we don't have profit margins built in. And that's one of our issues. And there's not a solution to that. Maybe you figure out how to get more products on the Board of Trade where you can hedge for phosphorus or nitrogen. Those tools really are not very widely traded or usable.
You had conversation today with a leader of Farmers for Free Trade. Does an effort like that, does that have some positives that are going to end up hopefully convincing Congress to do something about tariffs and other issues?
I think so. I should. Congress likes to hear from the farmers. They like to hear the actual people that are the feet on the ground. And Farmers for Free Trade is telling our story. They're telling what is happening out there and what we need to do.
What have I not asked about that you think is important to this conversation?
You have to give me a moment to think on that one. I just want to comment on, we've got a few things to worry about. The next generation of farmers that's going to come in when the commodities prices or the profitability of the farm is where it is. There are other jobs out there where it's 9 to 5, 5 days a week, and you can make a good income, and it's a known entity. When you're a farmer, I may work 6 days a week. I may work 7 days a week. Your 40-hour work week may be Wednesday afternoon. And you do that because you have to. And that's not always a situation that people want to get into. But we've got to find the next generation that comes back. Because I've become, somewhere along the line, I've become an old farmer and not the young farmer I always think of myself as. But we've got to find the next generation that wants to come back. I saw an article, I think they said, I don't remember if it was for Illinois or amongst all the farmers, only like 8.3 or 8.5% of the people that are farming are under 35 years old. So, when the average age of a farmer is 58 or 59, and a lot of people want to retire at 67 or 65, there's going to be a lot of turnover in the next, 10 years, 15 years.